it does take 3 to 5 years to build a plant, and 3 of those years are pure construction, and the rest are planning, permits, engineering, and so on. But then you would need to link that in this case with the supply of green ammonia, or rebuilding an ammonia plant to a green plant, which essentially has the same timeline as building another plant.
Welcome back to the Decarb Connect podcast. This week, we are taking a look at the fertilizer market, which, as many of you will know, falls fair and square right in the middle of some of the most CO2 intensive product that we currently use globally. Petter Østbø is joining me. He's the CEO of AtlasAgro, and I'll be talking with him about how we're going to rebuild the global fertilizer market from infrastructure through to products in order to drive net zero. We'll also talk a little about AtlasAgro's plant of the future. So, Petter, could you kick us off, please, with a bit of an intro into how you've arrived at this point in time?
Sure. Thank you, Alex, and thanks for having me. Background started in a consultancy called McKinsey, where I was working on energy topics, amongst them fertilizer, but also renewables. And then when I left McKinsey, I joined Yara, which is the largest fertilizer producer in tons in the world. And there I had many different roles, of which I ended up as a form of chief operating officer, so responsible for all the plants and mines and all the projects and so on, and also later the chief financial officer. When I was in Yara, we started this interesting project called Plant of the Future, and it was about finding out how could we do things with less energy, more green, and more autonomous, and so on. And a funny little byproduct of that is now the world's first autonomous electric ship. The Yara Birkeland is now sailing already autonomously in a Norwegian fjord. But anyway, so back then in 2016, it became clear that it was possible to build fertilizer plants without any emission, meaning the technology was proven and available, and it was more about finding a business model that worked. Now in Yara, we didn't pursue that at the time, and I left Yara in 2018 to be the group CEO of a fertilizer company called EuroChem, also that a global company, and was there for a couple of years before I started AtlasAgro to build my own zero carbon nitrogen fertilizer plants.
So I do remember seeing from LinkedIn that you had this experience at McKinsey before you came into Ferts. You definitely sort of matching this fertilizer knowledge with that really good grounding that I know anyone that goes into McKinsey at the start of their career gets in management, economics, all those other things that come to play. What was it ultimately, though, that encouraged you to make the move from being, an executive at one of the largest companies, or the largest company perhaps in the sector, where you could also have a big impact on decarbonisation and net zero, to startup world? Like, what was it that was the driver for that particular shift?
Yeah, no, when you're in one of these large companies, you have, of course, many stakeholders. You have the board, you have investors, you have existing fertilizer plants, and so on. And it's not so easy for them to start zero carbon plants. First of all, it's a big investment. Second of all, it doesn't really fit in the portfolio. Some of the big fertilizer companies make what's called urea, which is a nitrogen fertilizer that you cannot make green. Others do make nitrates, which can be made green. But the amount of investments that would need to go into green their portfolio is very, very high. It's also a different way of thinking than the current industry has. Whereas currently, the model is to build big factories and then export to the world. Think, the Middle East or something. And in this new way, the new renewable production way, you build appropriately sized plants in the market near farmers. So it's also an upside down business model to what the industry is used to. So those two together meant that it wasn't so easy to make this happen in the fertilizer companies. And I found that it was needed to start a new one, to not necessarily disrupt, but to have the freedom to build these plants as they should be and in the way they should be.
So to create and sort of shape from scratch, rather than trying to kind of, I guess it's hard in any kind of business, right? When there are set processes, set teams, set structures, set remuneration, all kinds of factors that mean that it can be hard to drive that change. But before we talk a little bit more about this kind of new venture and this new world that you've gone into, I did just have one question, because it's always interested me from the outside looking into some of these massive global companies, which is what is the conversation around net zero at board level? And is it, I mean, obviously, you know, a company as like Decarb Connect, we're a small business, but we're also 100% focused on this. So we're just thinking and talking about it all the time. What's the reality at board level in some of these major global corporations? How significant a topic is it yet now?
I think it's a very significant topic, and there's a lot of will to do something positive. What this positivity and will comes up against is kind of hard economic realities. So you have an existing portfolio, and it is fossil, and in a way, the more fossil it is, so the access to low-cost gas, for example, makes it more profitable. And then you have fiduciary duties towards your shareholders. You know, you need to pay dividends and so on. And when all of these clashes, it's not so easy to take bold decisions which have a negative impact on some or more of these stakeholders. For example, if you were to kind of decarbonize existing plants, they would need to be taken out of production for some period of time. Potentially, you would need fewer employees. You know, your profits would be lower. Competition would not do the same, and so on. So it's not necessarily easy, and it might not even be the right decision for all of these companies to go fully green, which is why you're seeing more of them focusing green efforts towards new markets. So in our space, that would be green ammonia for shipping fuel, or potentially for co-firing in coal-fired power plants. It's easier to attack because this is growth and new markets and new opportunities, and you don't have to cannibalize your own assets.
Okay, well, let's move into the forward-looking part of the podcast then. When you look across the fertilizer value chain, with all of that experience that you're bringing from Yara and EuroChem, what is it that at AtlasAgro you're looking at? What are you trying to achieve? What are you trying to drive? Yeah, and what are those? I guess you're looking at both opportunities that exist in this value chain, but also challenges. So tell us about your perspective on that and what needs to be prioritized.
If we take the helicopter and we look at the nitrogen fertilizer space from a broad perspective, it consists about 2% of world carbon emissions, including its use. So what we're really solving for is getting down as low as possible. And the way to do that is twofold. One is in the production itself, about half of all these emissions happen during the production. So today, using coal or gas, nitrogen fertilizer emits up to 3 tons or even more of carbon per ton of product, which of course is a lot. That can be brought pretty close to zero. So it can be brought to zero carbon, but there's some nitrous oxide emissions left, but it's pretty close to zero. Number two is the emissions in use. And here we have two types of fertilizer essentially. So 80% of world fertilizer is a type of fertilizer called urea. And that is a quite dense nitrogen source, meaning it's cheap to transport. But on every other parameter, it's a worse fertilizer than the other alternative. And the alternative is called nitrate. And that has better agronomic properties. It can be used for precision farming. It can be made zero carbon. There are many, many benefits to it, but it transports less readily. So that translates to it being slightly more expensive. So for a plant that you would build in the Middle East to transport to the world, you would naturally build urea just to reduce the transportation cost. When you build in a new way, which is close to customer, transportation costs are much, much lower, and therefore you can also build nitrates. However, that means the local farmers need to change their practices from what they have been using, the urea type, to the other type, which is nitrate. It's not insurmountable because it is still a hefty part of the world nitrogen use, but every farmer then needs to change the practices somewhat, and they need to get used to paying a slight premium per ton of nitrogen than what they have been used to. From a production perspective, our technology is proven and available, meaning it exists, and plants similar to this have been operating before. What is new is the scale. So putting this many electrolyzers next to each other and feeding an ammonia plant has not yet been done. In our case, we are talking more than 250 megawatts worth of electrolyzers to feed an ammonia plant. And just that integration at that scale is relatively new. I mean, there are some examples in China, for example, where they're doing this, but in Brazil and in the US, where we are building, this would be new.
So what are some of the challenges that come with that then, this kind of bringing, that number of electrolyzers around a changing plant infrastructure? What kind of challenges does that put on your to-do list?
I think the main challenge is to get a construction cost and a risk of the construction which is reasonable. So we as a small company don't have a big balance sheet. So we need someone to help us build this in a way that most of the risk of the construction is taken by the construction contractor. So what we're working a lot of is making them comfortable and able to take that risk.
And is AtlasAgro the model for the business? Is the electrolyzer setup, is that owned, or is it that you're partnering with other electrolyzer companies? How are you building the kind of the value chain for your construction model yourself?
So the hydrogen production unit is a relatively small part of the entire plant, so less than a third. And also hydrogen does not transport well. I mean, it needs to be used where it is produced. And those things together means it's economically optimal for us to build and own our own hydrogen. So we are not partnering with anyone to produce hydrogen for us. We do everything from when the power comes into the plant to the fertilizer leaves ourselves. Our partners are mostly downstream, meaning distributors of fertilizer, and then also renewable energy producers upstream.
So you are building this kind of company-owned model, and you're going to be locating it in more kind of localized areas. Localized, I suppose, I mean by that, bringing it directly into the markets that you're hoping to serve. What else are some of the changes that the approach you're looking at, and this kind of systemic rethink? What else is required of it, do you think?
We're kind of going back to the 1950s and 60s. So back then you had local fertilizer plants in the markets serving local markets, and then they grew and were moved to more export locations. And for this to work, so for us to be able to compete with fossil plants head on without any green premia or taxes, we need to be located near the farmer and far away from the fossil producers. And that means we are building inland in markets that are not currently served. Like our plant in the Tri-Cities in Washington, the farmers on average pay more than $120 per ton for the product just in transportation. And that's depending on, of course, the product price can be more than 30% of the total end price, just being the transport from the factory.
And then what other aspects of this do we need to take into account? I'm thinking of, there are very established ways of trading of fertilizers. In fact, years ago in a former life, I used to be involved in one of the events that matched traders with each other for a very one-on-one trading environment. So with the trading and spot markets in mind, how do we help green products to establish themselves? How do you think AtlasAgro can sort of drive that sort of change as well?
What's new now is that the benefits of a zero carbon fertilizer is, once it is the nitrate itself, which is a better fertilizer, but that exists. But the zero carbon nature, of course, decarbonizes the whole value chain. It decarbonizes the farm, the food processor, the consumer goods company, and the retailer. What is new now is that the companies that primarily face the customer, so the consumer goods companies, the PepsiCos or Kelanovas of the world, they have not previously been interested in or involved in fertilization. And nitrogen fertilizer is the biggest cost of emissions in the entire food value chain, including plastic packaging, including transportation, even including cooking. And for them now to decarbonize, they need to get involved in fertilizer. And that's basically new to them. And also how to get involved. So should they pay a premium? Should they tell a farmer what to produce or not? And that's what many of these consumer goods companies now are struggling with, is how exactly to get involved to get the benefit of this carbonization.
What's your gut feel for yourself on what the main change there is going to be? Do you see a future where the PepsiCos of the world are kind of pushing more to tell the farmer how to produce the product? Or do you think, is there some other kind of avenue that you think is more likely?
No, again, if we take the helicopter, for all of nitrogen fertilizer worldwide to be decarbonized, we need to build 800 new plants of our size, and each of them takes about 5 years to build and cost more than $1 billion. So the scope of the change is enormous of what needs to be done. To support this, the food companies initially would hopefully support this green fertilizer by saying, okay, we will pay a little bit extra to the farmer for using this in order to assure that our value chain is, to the extent it can be decarbonized by this fertilizer, is decarbonized. That would be necessary for a little while, whilst a few of these plants gets built, and then hopefully over time, it becomes the natural way of supplying fertilizer, meaning it's kind of supporting the birth of this decarbonized industry, and then it would be the common way of supplying.
And coming back to something you said earlier about the difference between the urea-based market and the nitrates-based market, what is the reality of persuading right now in this kind of very early stage of driving change? What is the reality of persuading farmers to adopt a different approach, to adopt this, a product that they may be aware of but haven't always used?
It's fairly easy for us to convince farmers to use nitrates because most of them will know it. And if not, the agronomic proof that it's a better fertilizer is pretty strong. You can also do trials to show it. What is different is that we require longer term contracts. So for us to get the financing that we need, we will need the banks require that we have 5, 6, 7 or longer year contracts with either a fixed price or some minimum price. And this is a commodity market. It's like oil. It's not used to that. So not only do we need some farmers to switch from urea to nitrates, they also need to commit to long-term contracts, which they are not used to do. Now, we have signed several such firm, bankable, long-term contracts with some of our farmer partners. So it's not only can be done, but they're eager to do that. But definitely that's one of the challenges, is making this switch from a traded commodity to more of a long-term relationship.
Okay, understood. So it's yes, I had thought originally that it was more about literally the way that in which this product, your products were used, but it's not. It's simply the habits and behaviors around how, I guess, both major farming companies, but also individual farmers are used to procuring what they need for their land. So it's that's the behavior shift.
Yeah, and it's a risk thing. So our cost base is renewable energy, which is flat. Our costs are flat, whereas gas prices go up and down. So whilst we could be competitive and even underbid the average prices of fossil products, we cannot both be cheaper on average and always. So it's of course safer to be exposed to the market, and then prices go up, prices go down, but at least you're never overpaying. Whereas in our case, we would require some kind of commitment, which means possibly you would never be overpaying, and possibly a long time you would be benefiting, but there's always the risk that a period of time you would pay more.
I just want to take this opportunity to thank our production partner and sponsor, Jano Media, for their support in delivering the Decarb Connect podcast. Over the last few years, they've helped us to facilitate great conversations that connect us with our audience, and their skills and expertise mean that we get to concentrate exclusively on generating the content, the conversations that engage, inform, and inspire. Well, let's sort of switch our view to a different aspect of the whole net zero challenge. We hear a lot about the opportunity for waste valorization in other sectors. Tell me a little bit about what your perspective on this is, and what's the potential for this through your own business, through your own sector?
In fertilization, waste, meaning manure, is commonly used and should be used. You also have the opportunity to use certain, human waste from digesters and so on. I think that should be maximized. Definitely, we should be using natural fertilization as much as it can be. Our particular plants cannot use recycled material. Our raw materials are just renewable energy, water and air, and there's no organic material in there really. But what we can do is spike it with it. So you could add or you should add our fertilizer to manure and other natural sources of nutrients. like biostimulants and so on, definitely have a place. So our perspective is that as much as possible, you should do with recycled sources and biological sources, and then you should add mineral fertilizers as you need.
And then in terms of AtlasAgro as a business, where are you at on your own journey? Obviously, it's still comparatively early days for you, but where are you in terms of building plant or plants, and what's that kind of pathway looking like for you over the next, I don't know, 3 to 5 years, a fairly short-term window? What's that short-term view for you?
Yeah, I mean, it does take 3 to 5 years to build a plant, and 3 of those years are pure construction, and the rest are planning, permits, engineering, and so on. Then you have the option of buying a fossil plant and converting it to green. Those are the 2 things you can do. We're looking at both. Our 2 most advanced projects are in the Pacific Northwest of the US and also in Uberaba in Brazil. One of them, the Pacific Northwest, has passed the FEED stage, meaning we are looking at starting construction when we have everything in place, such as permits, grid connection, and so on. And we hope to do that within a year, which means we plan for a 2027 production start. In case of Uberaba, it's about 1 year after. And then whenever you acquire and turn around, of course, the acquisition could be, let's say, anytime, but then you would need to link that in this case with the supply of green ammonia, or rebuilding an ammonia plant to a green plant, which essentially has the same timeline as building another plant. So 3 to 5 years.
And then the medium term, like when you look at where you'd like to be, I don't know, 10 years down the line, what's the sort of size of portfolio you're aiming for? And are you thinking global, or are you thinking very much Americas? Obviously, you've talked about the Americas being your starting point. How do you see it unfolding after that?
Yeah, we talked about this need for 800 new plants to decarbonize. And when we have the Pacific Northwest ready, let's say 2027, we need 799 more. So for us, the market potential is, for all intents and purposes, unlimited. And we've analyzed where can we build today in competition with fossil without any support. And you're talking at least 25 plants that you can build profitably. And that for us also is a lot and will take many, many years. So our ambition is to build as many plants as we can, as fast as we can, and globally. So we talked about the plants project in the Americas. We also have one in Asia Pacific and in Europe. So our ambition is to be the fastest growing zero carbon nitrogen fertilizer producer in the world.
And in terms of the team structure right now and the stage you're at in financing, fundraising, how would you describe your team and the kind of phase that you're currently in?
Yeah, we're still, when it comes to team, in a relatively early phase. We have just about 30 colleagues now sitting in Europe, Brazil, and the US, but growing fast. Then we were happy to welcome Macquarie Green Investment Group as our major investor last year. So they committed to $325 million, which sees us for a long time. Of course, when each project costs $1 billion, that doesn't really cover all those costs, but it takes us quite some way. And then when it comes to the team, whenever we take final investment decision, meaning we start to produce, then you need to ramp up gradually towards first production. The full team on site, which will be about 140 people per plant, plus outsourced services like electricians and so on.
I suppose one of the interesting things about where you are right now is you have come from this experience in the big global companies. You're now building something that you see this route to a very clear route to global domination of the green agri markets. But if you put aside your competitive feelings about the market for a minute, what would be your call to action for others in the fertilizer section at the moment? I ask this question of quite a lot of people on the podcast because I think sometimes there's, we are all competitive, we are all commercial, we all want to do well, but we also are here for a reason. You've chosen to go into, green ferts for a reason. So what's the call to action that you would say if you had an audience of other fertilizer producers in front of you? What do you think they should be doing or focusing on right now?
So we hope to lead and for the rest of the industry to follow. So we really would like for the remaining parts of the nitrogen fertilizer industry to take emissions seriously and to start truly decarbonizing. So one thing is talking about doing things and experimenting with the pilots, but we hope they would start constructing real world scale plants and starting to essentially start decarbonizing properly. It can be done. They have big balance sheets, we don't. So definitely, the more competition we have for zero carbon nitrogen fertilizer, the happier we are.
Well, Petter, thank you so much for joining us. And I'd love to have you back when you've broken ground or a little further along with that Pacific Northwest project, because I think that will be a really interesting stage as well to reevaluate how things are going. But thank you. Thanks for sharing how you've come here, but also the plans.
Thank you for having me, and I look forward to recording during the opening of the Pacific Northwest fertilizer plants in Richland, Washington.
Great, thank you.
At Jano Media, we recognise that great content has the power to create impactful and positive change for lives and society. Whether that's video, live streams, photography or podcasts, partnering with us will enable you to harness the power of content to engage, inform and inspire. Reach out to us today.